Hi everyone, this is Rob Roy and welcome to the Elliott Wave Options S&P 500 U.S. market update. Well, the big news today was the financial stocks got rocked as the rhetoric's beginning to heat up over the potential of negative rates down the road. We alerted you to that Fed Fund futures chart in the last recording. Chairman Powell came out today and said the Federal Reserve is not looking at that right now. They have other tools in their toolbox that they prefer to utilize. But the charts say something different. Let's take a look. Before we get any further, with the last contest that we did on the Chuck Norris one-liners, y'all had a great time and been keeping that whole Chuck Norris theme going. So we thought we'd do it again. We're going to give away another free 12-month subscription to both our portfolios, the Impulse and the Volatility portfolios. But this time, we want your favorite Chuck Norris movie. So make sure you hit subscribe, list your favorite Chuck Norris movie. We'll put them all in a hat and draw a winner for that free subscription. So let's keep the fun going. For our timestamp, it is 1:30 a.m. Eastern Time on Wednesday night, Thursday morning, and at this moment the futures are down 5 1/4 points, so looking like a pretty much a flat open at this point in time. Looking at the market, as we take a look at this channel that we drew before, you can see that we kind of tried to break out today. Now, we've talked about this numerous times. We break a major support resistance line, trend line, moving average. You have to have a second day, follow through a confirmation day. So tomorrow is going to be really important to see if we're breaking out of this trend line. But one thing that there is no doubt about is that 61.8% fib corrective level is acting as major resistance, just as we thought it would. It is a major Fibonacci ratio, and it's doing its thing. So we've double topped basically up there, hit that peak 2 separate times, and I've had a couple down days since. And if we take a look at the volume, you can see that we had increased volume today, so pretty significant volume on that downward move. I'm going to take these lines off because I also want to show you the moving averages because they're interesting as well. So you can see that we closed below the 10-day moving average, just below the 50-day moving average, and kind of right on top of that 30-day moving average, which is the fuchsia line. So we're really getting close to maybe some more significant move to the downside. Tomorrow's trade, as I mentioned, is going to be very important. I said in the beginning that the financial sector, bank stocks took a hit today. Let's take a look at the ETF, the XLF. And you can see that that was a pretty significant move to the downside. It is in a wave 5 lower, so we had a good corrective move on the wave 4. We actually had a flat right here in the wave 5, and then we've started to the downside. If we take a look at volume here, you can see also above average volume. So the Federal Reserve and Chairman Powell might be saying that they're not looking at negative rates now, but the Fed Fund futures has a pretty amazing record of forecasting, and the financial stocks sure are acting today like they're concerned about the potential for negative rates in the future. A long time between now and the end of the year, and we'll see how that plays out. Going back to the market, something that interesting to the potential further downside is if you listen to Dr. Rick Bright, who was the former director of Biomedical Advanced Resource. He was let go of his position last month. He's going to be testifying in front of Congress tomorrow, and he says if we ignore the science, we're headed for possibly the darkest winter in modern times. Maybe being extreme, maybe not. Thinks that this pandemic, the COVID-19, has the potential, again, if we ignore the science, to be worse than the Spanish flu of 1918. So that's something exciting. So if you read his stuff, you don't want to leave the house, basically. Looking at a chart of the VIX, you can see that we bounced up the last couple days, but here's the glimmer for the those on the bullish side. We have a pretty good channel right here too, and we've not broken out of that. So there's a descending channel in the VIX. We're at the top of it. So if the VIX is not going to break out of this downward trend channel, then we should move lower in the VIX, would again correspond with a higher move in the market. We still have that gap floating around down there that eventually one day will get filled. Thought we'd also revisit the 10-year bond. It didn't move today with the financial sector, but you can see that it is continuing to consolidate in that triangle and just getting a tighter and tighter point to the triangle. It's going to be pretty interesting when it breaks out. It looks like it'll be a fairly volatile breakout, especially for the 10-year bond. So anyway, hope everybody's doing well, and look forward to talking to you again next time. Take care, everybody. If you like these recordings, I'd like to invite you to join our new Trade Finder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.